My friends, what is going on? Welcome back to the channel. Long time no see. So this video is going to be covering how and why I played puts on Tesla today, and then I flipped to calls pretty much at the low of the day. I wanted to just kind of walk you through the analysis of what I look for on the chart. It doesn't matter if you're talking about Tesla. It doesn't matter if you're talking about any chart. I always tell my Discord, just trade A+ great setups. You're going to have some failures. You're going to have some setups that invalidate. But overall, so long as you always focus on taking great A+ setups, you're going to have more winners than losers. And at the end of the day, that's the goal, right? To have way more winners than losers. So before we jump into the video, you guys know the deal. Nothing I'm giving you is financial advice. This is just to educate you on how you can start analyzing charts and take great setups yourself. And then also too, if this video is helpful to you, please like and subscribe, all that good stuff. The more interaction the videos get, the more likely I am to do more of them. So having said that, let's jump into the chart. So like I said, Tesla today, I took these puts whenever I closed them out for right at 180%, and then flipped long on calls. Rode Tesla back up to 180 for 35%, made right around 23K today in total. So, like I said, hopefully this video helps you out so you can identify these setups. This really all goes back to Thursday for me. On Thursday, Tesla, so post earnings, Tesla had massive gap down, sell off all day, and then it kind of consolidated in sort of this rising wedge slash bear flag look. So what a bear flag look is, you get a big move, then you kind of consolidate up like this, and then you get another big move out of it. So Tesla was definitely doing that, and on Thursday, heading into Friday market open. So here's at the end of the day on Thursday. So Tesla actually broke down. Then it started this low volume. You can see down here, there's no volume in this move, this low volume creep up. Obviously the market overall has been ripping. So came back right to the top, and then we'll go to, I'm gonna turn extended trading on for a second. It's gonna mess up, my trend lines and everything like that. But essentially, Tesla came up here and retested Friday pre-market going into market open. And I told my Discord, I am grabbing 185 puts right here, right off the open. So and I just switched to the 15-minute chart. So you can see right at open, Tesla came back up here and it tested these pre-market lows and got rejected right around this 186 level. After that, so that's right whenever I jumped in puts, and then rode this move all the way down. Took profits on my initial position at between like 20 and 40%. So took profit 2 different times in there. Then of course, Tesla towards the end of the day Friday ripped right back up. So my remaining contracts at this point in time, so I had already taken all my initial position plus profits off the table here. So I was only pretty much down to runners at this point in time. So Tesla rips back up to the end of the day on Friday. And then as I was studying the chart this weekend, I noticed some things. So, and I'll kind of walk you through this here. So pretty much lately here at Tesla, every single time it's had a rally, it's retracing. And when I say retracing, I'm talking Fibonacci retracements. So to draw this one, you go from your high to your next swing low. This shows you where does your move push back up to. So you can see right here, got rejected off the 786. Then the next one, pushed up almost to the 786, got rejected. Now, here we are on Friday. And like I said, I was still already holding puts. Tesla came back up, got in that 618 in that golden pocket range, couldn't break above that, was also the pre-market highs. And Tesla, like I said, it was stuck right here, right at the end of the day on Friday, when obviously the overall market was having a really green day and really ripping upwards. So on Saturday, just to show you guys, I have a section in my Discord where I just go through my trades. So on Saturday, I basically laid out the trade for my short thesis. So I said, if Tesla opens up right up around up here. So once again, I'd already taken a large portion of my position off the table. And I said, if Tesla opens up right up in here in this golden pocket, I'm going to reload shorts at this point in time, because if you follow me on Twitter, you know I expected a gap down on Monday and an overall choppy to reddish day overall. So the short thesis was, if Tesla came back up here to the 187, 188 range, I was going to jump into shorts again. Once again, still already had a position. And then where was I going to cut? So I would say my trade would be invalid if I started getting above these highs right here. So Tesla multiple times, both on Thursday and Friday, during pre-market session, was rejecting that 191.50. So like I said, I was already in shorts, but to give you an idea, right here, whoops, it's going to be a long position one. Here we go, short position. So like I said, was already in right here, was going to cut if I got above here. Now, where would my price targets to the downside be? Well, my price targets to the downside, and like I said, already laid it out in the Discord. So my price targets to the downside, this is where I like to use a fib extension tool, was going to be from my highs, then your low, and you go back up to your high. So my price targets were going to be anywhere between 180 all the way down to potentially 173. So this was my trade setup. Now I got an 3.5, almost 4 to 1 risk to reward ratio set up on this trade. So that's a great trade, A+ setup in my opinion. You have a low float, retesting the bear flag, coming back up to a very normal extension, a normal retrace at that 618. Now the move absolutely was to play further downside. Another reason that I've been planning on this trade was we also have a huge weekly support right here. So that 180, so I initially took profits at the 180 and then was willing to go all the way down. Now, I got out of the trade and I flipped to calls at this point in time. So right here, literally almost bottom ticked this trade, like I said, for the 180%. And then I flipped into calls. Now, why would I do that? Well, once again, this is analysis that you can quite literally use on any chart. So we broke through that weekly support, and now all of a sudden here, after market open, the volume all really starts flooding in right in here. This is typically where you're going to see that what we call stopping volume start to come in. So once this stopping volume comes in, so you have this huge, just straight waterfall, straight selling pressure. This is what you call stopping volume right here. Once you get down in here, this is going to be where sellers are starting to get out of the way and buyers are potentially stepping in. So what I noticed on this huge selling volume was then we basically put in some 5-minute tweezers, okay? So what tweezers are is basically going to be 2 candles in a row where the lows are pretty much at the same level, okay? And you can also get these at the top of uptrends. So if you quite literally invert this, this can be a sign of reversal at the top as well, especially if you start getting some high volume in. So this is where I started. So I exited my puts and where I started to look at calls. Now, what I was looking for is I was looking for this candle right here. This candle right here was a 5-minute close above these previous levels. So you can see the rejections right in here, basically right at 176. Once we broke above that 176 rejection and we closed above it, then I jumped into 180 calls. So this one would be a long position where I was looking at, I would close if I started to make a new low right here, and I was looking to ride it right back up to the weekly support line, right around that 180. So, you know, at this point in time, once again, I have a 3.65 risk to reward ratio. Great risk to reward ratio, great A+ trade setup. even if this was just going to wind up being a dead cat bounce for me, it was absolutely worth it to play the top side to get out of puts and play the top side push at this point in time, because I knew this 180 was going to be tested again. So played the calls right here, and then I exited on this higher volume shooting star candle right here, and that's where I exited for the 35% win on this trade. Then, as you can see, we didn't dip all the way back down, right? As soon as we got this high volume shooting star candle, the very next candle shows you that bears were still not willing to step in right here and shove this thing back down towards the lows of the day around the 175, because that's what I was going to look for next, is maybe a potential double bottom. But instead, what we got is we actually broke out, pushed through that weekly support. Then you can see here it was tested multiple times and now is showing a support, even here in after hours showing a support again. So I'm going to be looking for still some continuation topside on Tesla. My Discord knows exactly what I'm looking for as far as where I really thought the lows potentially. So this kind of little flag sesh pennant, so it has broken below, but really so long as you stay above 180 overall, you can look at potential topside on Tesla. And then the reason that I was looking for the 175 area as lows anyway, and we'll get back here, do a little bit of overall kind of macro analysis on Tesla, and then we'll let you guys get out of here. Appreciate you sticking around though. So on Tesla, on a weekly basis, I believe it's playing out what's called a 3 drives pattern. I'm not going to get into a ton of specifics here on that, but essentially how I look at it is marking out this fib right here on this fib expansion. So we had this move down, retraced up, then it moved back down, and it touched the 1.272 extension almost to the penny. So these are what are called harmonic patterns, which just means you're looking for a similar retracement. So from the next high to the next low, back to the high, you can see here that Tesla, whoops. So that 1.272 is pretty much right at 176. Also, we start to back out a little bit. We look at all these different fibs, just a lot of confluence that the brakes could be put on here for Tesla. We'll hide that weekly support, but we'll look at a couple different fibs. So from the low that we saw back in April, 175.93, call it 176, that's the 786 retracement. From the low of when Elon was selling all of his shares, so from that January low to where we're at right now, that 0.5, 174.89. Let's call it 175. The fib retracement from the all-time highs to the most recent lows, the 382, basically 174.30. So that's why, for me, between 176 to 174, and I've been saying this for, I don't know, at least 2-3 weeks now in my Discord, this is going to be the first spot I'm really looking for an actionable bounce on Tesla. And I do think that it could be taking us back towards the kind of the low 200 range. But, that's where it was not, the risk to reward was not still to be short on Tesla once you start hitting those key levels. I do think if the market overall pulls back, I am still looking for one more potential low on Tesla, but it's not going to be the 140 gap range. I'm looking for around like maybe 163 to 164 if the overall market kind of gets a little bit ugly from a pullback standpoint. But right now, Tesla to me, also too, you had this trend line right here. So from the August low, then the October low, now where we're sitting right now, for me, Tesla's essentially creating a descending broadening wedge. Look, after its 3 drives pattern, descending broadening wedge. So essentially you have the pole and you have some corrective movements, some corrective waves, if you will, before potentially pushing out of here. So Definitely not saying the low is in yet for Tesla. I actually still have some more targets that could be potential lows, but today was a real good sign of some stopping power. The fact that you swept those weekly lows, and what I mean by that is, so last week's low, the fact that you completely swept that, so anybody that potentially went long in here that was like, okay, I'm taking a stab at Tesla, anybody that was long here probably got swept out. Also, too, how many people do you think got completely bagged when they decided to short underneath 180? If you weren't looking for that exit around the 175, those people are now bagged and pushing topside. So I do like the volume that came in today, especially in an overall day where the market, at least the last time I was looking anyway, the volume was, yeah, so the volume was kind of lower on SPY. Let's see what it was looking like on QQQ. Yeah, so overall, just very low volume days in the overall market, where Tesla had above average volume. You got a hammer candle here, which I'll just kind of... So, for those at home, whoops. Yeah, here we go. So this is basically the look that you're getting. It doesn't matter if it's red or green. You just want to see the breaks start to get put on. You want to see this candle get bought back up from the lows, and you want to see increasing volume come in. And if you break it down where we were at on a daily basis in here, you know, the majority of this volume is all coming in at the lows down here. So like I said, that's what you typically want to see. If Tesla does roll over from here, so long as we stay above 180, overall, I'm going to still be bullish on a continued bounce upside. Then the next thing that you'd be looking for is a potential double bottom down here around that 175 area. If 180 fails, you'd want to see bulls step back in at the 175 mark. And then if that doesn't hold, then I would be looking for my around that 163 to 164 look. So anyway, hope this video was helpful to you. I hope that shows you, like I said, just some A+ setups that you can potentially take. Watch this video multiple times if you have to for it to make sense. But at the end of the day, like I said, just wait on those A+ setups. I don't take too many trades. I took 2 trades today, which you can ask anybody in my Discord. That's very unlikely for me. Taking that many trades in a day, and especially flipping from, you know, short to long. But Tesla, like I said, got a beautiful move right to the price target that I was looking for. Clearly stopping volume and power was coming in at the levels I was looking at. So that's why I got out of puts and then jumped into calls. Even if this is just a dead cat bounce, it made more sense to be long here on Tesla. I closed out my covered calls, all that kind of stuff. And here, it made more sense to go long at this point in time than be short. Like I said, please like and subscribe. Hope this video was helpful to you. Yeah. Hope you make great trades for yourself, your family, and your portfolio. Hope you have an awesome week. Have a good one, guys.